Hello, this is Team Loan Comes Effects. Hope you're doing well today and you're getting some good trades. I've been asked if I would give my thoughts about the euro dollar and where the euro dollar is going from here. Now, I had been mentioning on the weekly chart that the euro dollar had a head and shoulders pattern with a downward neckline. And you can see that the downward neckline is coming across right here. This was the shoulder, head, and the other shoulder over here. If I simply take my fib retracement tool and run it from the swing low to the swing high, and draw out the fib levels, it reached the 127.2 previously, and then we had a nice little bounce up, about a 38.2 bounce from this low to this high, based upon this high up here. But since that time, it's come back over, broke back below that important 125 to 125.20 level that I've been mentioning to folks for some time. Broke below that and then finally reached that 123.88 level, and as of today we saw it break the 122.66 and head on down to a 2-year low of 122.28. As a matter of fact, in my live active trade room today, I actually traded the euro dollar short and I called 22.28, and the market just came right down right to about that point and then bounced right back up. And since then, during the FOMC meeting minutes, we've seen the market drop some more. So the question is, where do we go from here? Well, if I simply take a look at this a little bit further down, there's a potential to see it roll down to the 1618 level, which is going to be at the 2090 mark. Now, I'm not saying that the market's going to continue just going straight down. It's going to bounce around a bit. It's going to have to find a floor and work off of that. But based upon the given news coming out of the Eurozone, it doesn't look favorable for the euro right now. It seems in part that the Eurozone's kind of unraveling at the seams. And it appears the European leadership is getting a bit disenfranchised with each other, as it doesn't seem that folks are falling in line with certain expectations or promises that have been made. So I expect the market to roll on down to 1618 level, which is at the 120.90 level, probably about 121. We may see a bounce at that point. But where do we go from there if the market continues to slide down? What we're going to do is to look back in time and look at previous lows. Simply going back a bit, you can see that we had this low point right here, which was in June of 2010, which was 1.1876. Now, we had a financial crisis situation back there with Lehman Brothers, but the market worked its way back off of that. But still, we didn't have as much issues with the Eurozone as we do now. So the anticipation is, if we get from where we're currently at, the 122.37 level, and we drop down and we break that 121, and 121 holds as a resistance level, then I expect to see it roll on down to 1876. If you step out a little bit further in time, we have to go out a ways here, we start coming into another level. And this gets us in the neighborhood of right in here about November of 2005, where we started having these lows right back here. And that was at 116.39 level. We worked off of that. Let me do this. Let me just simply go to the monthly chart. You can kind of see these come together here. There's the 1876 low. There's the low there at 1639. And a break of this level sees us come on down to this low point going back to August of 2003, where we had reached a low point right there of 107.60. Now, I don't expect the market to make that big of a move anytime soon, and as you can see, it took a long time for us to get down to these levels. But if the euro continues to be under pressure and the Eurozone can't seem to get things in place, then there's going to be additional movement to safe haven, which is going to be out of the euro and into the US dollar. Unless there is a safe haven play into other risk asset currencies like the Aussie dollar or the New Zealand dollar, or maybe even into the pound. But those are my thoughts for right now. Look for the market to break down to 121, then go to 1876, then 1639. A break of 1639 is a pretty large distance to travel down to about the 108 level. A little bit below that, the 107.60 is that low that we had back in 2003. Other than that, we're looking for a pretty good drop from that 107.60 level. The next low really isn't until we get down into this area around February, March, and April of 2002, which was down around 0.85 on the euro. So there's a lot of potential downside here. We'll see what happens. It is in a downward channel here, and there's the potential that we could see it continue to roll on down. Just be aware of these levels. If 1876 is taken out, then we'll definitely have a downward channel occurring in the euro dollar. That's the downward channel right about this. And so if this pushes through 1876, pushes through 1639, from a monthly point of view, and this could be a ways out still, but there could be the possibility that we could see it come all the way down here to about the 114, 113 level on its way on down to 108. This is big picture. It's got a long time to get there, but if things continue to unravel in the Eurozone, that's the potential direction for right now, having broken that 125 head and shoulders and now breaking the 141.4 fib extension off that right shoulder, this little shoulder right here, breaking that. We broke that 141.4, look for the 1618 level to be hit, which is going to be, again, pretty close to 121. Well, folks, it's Dean Malone with Compass FX. Hope some of this information will help you out in your trading. Y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.